Hey guys, it's been a while. Welcome back to the channel. Uh, do you guys remember my previous videos where I talked about how gold has been doing really well and I think it would keep doing well, but then I lost a whole bunch of money? I think I maybe lost about 100K between October to November. Yeah, that was not great. And then I started doing some dumb things like playing zero date expiry SPY options, S&P 500 options and stuff. So I lost a lot of money here. Now, if I had held and really believed in my convictions, um, which to be fair, I should have done more research or listened to more interesting and, in my personal opinion, more knowledgeable information sources, then I think I would have benefited significantly from this more. So you can see just in the last month alone, gold has, uh, this is 3x leverage. So you divide this percentage by 3. So gold has gone up probably about 40% or so. Let's take a look there. In the past month, yeah, 24%, yeah, 61% in the past 6 months. So you can see gold is going up significantly, and you might think, what the heck is happening? Why is this happening? I'm going to lay down a basic structure of large events that are happening, and then I'll try to dive a little bit deeper into these things, but I'm not going to go too deep. Instead, what I'll do is I'll point you to some other YouTube channels that are going to go a little bit deeper, cover some more of these topics, who I think are more experts on those subjects than me. So at a high level, what's going on right now? You have federal interest rates, which are being held steady. So federal funds rate is staying at 3.75% right now. And what you have on a macroeconomic scale is a president, in other words, Donald Trump right now, who is threatening lots of groups with tariffs. I believe South Korea is the latest victim with 25% tariffs. And South Korea is trying to accommodate these trade agreements and things like that. And you see a general movement away from the US dollar. Something that surprised me is knowing that US Treasury bonds held by China over time has been significantly decreasing. So what you see is that they have been selling off the US Treasury bonds that they hold. And now, I believe, yeah, by November of 2025, the holdings fell to only about, $680 billion, where they used to have double that just 10 years ago or 12 years ago. Now, part of this is now Japan is the largest holder of US Treasury bonds, and then the UK is second most. And yet, the UK and EU are all potentially thinking about dumping more US bonds. So, when you dump US bonds, you're basically saying, F you, we don't want your bonds, and uh, we are going to sell them away, and we're going to basically try to trade them away so that they go back out onto the market. Well, what this ends up happening is that it basically says, oh, US dollars aren't interesting to people anymore, and people don't really want US dollars anymore. Now, maybe 50 years ago or something, there was a saying, dollar is king. And what happens is every country in the world typically would hold US dollars as a medium for trading with other countries. Because let's say I'm Zimbabwe and my currency is like, oh, I have $1 trillion and I'm going to keep printing more money because I have lots of debt. So, oh, I have debt? Well, let me just print some money to pay for the debt. So I'm making money out of thin air. And I owe you $10 trillion. Okay, well, let me just print another 5 trillion and I'll pay you with that. Well, that can sound fine, but then what happens to the rest of the people in the economy? All these people in the economy go, wait, what the hell? You're just making money out of thin air. Now everything's going to get more expensive because this money starts flowing through our economy again. And now, instead of my house being worth 1 trillion Zimbabwe dollars, it's worth 3 trillion Zimbabwe dollars or something. This is also tied back to why US inflation is a concern right now, because US inflation is partially being affected by a lot of these US Treasury bond dumping. So long story short, we seem to be losing strength in the dollar. People seem to be saying, hey, you know what? There's a lot going on with the US. They're trying to invade Greenland. They're kidnapping foreign presidents and stuff like that. This is not cool. We are going to start to move away from America and we're going to create trade partnerships with other groups. So that's where the EU and India are now partnering a whole bunch of deals because, and these are really massive trade deals, like $27 trillion market. That's huge. And that's because they want to move away from the US, who's threatening everybody and bullying a whole bunch of people. So that's also not to mention trying to basically rattle a saber at different folks. So rattling a saber at the EU over Greenland, potentially warning Iran about escalations and things like that, potentially other escalations with China. So China recently, speaking of which, they got rid of one of their top-ranking military officers, and there's a little bit of mumblings about, oh my goodness, are they gearing up for wars and stuff like that? And then you have the Russia-Ukraine front, which is also causing a lot of rumblings. Oh man, like this is, they are trying to fund it, but how do they fund it? Through oil. So then it ties into the whole conversation about, okay, well, how is the global economy being impacted by that? And I think the biggest takeaway from all this is that right now, times are uncertain. And in uncertain times, where do people put their money? They put it into physical assets, things like gold and silver that hold value. Those things aren't going to grow in value because they don't give you interest. But what's the point of interest if I can just keep printing more and more and more money? I keep using Zimbabwe dollars as a scapegoat example, but let's just call it like Zorp dollars, okay? So I decide that, I'm the country leader of Zorp, and I can print infinite amounts of Zorp dollars. So let's say that times are really uncertain. Zorpians are going to war with some other group that I don't like. So I say, well, how do I get them weapons and supplies and things like that? Well, I'm going to print more and more Zorp dollars and just make money out of thin air to pay a whole bunch of other people from other countries and stuff. So now a whole bunch of other people from other countries are holding on to these Zorp dollars and they're thinking, well, these are kind of useless. Maybe we'll just, hold on to some of these. But at the end of the day, what we want is something that's we all agree on is valuable, not these Zorp dollars that you print like paper, and which some people actually just use as toilet paper because it's so worthless because you keep printing it. So the problem here is that nobody has trust in the Zorp dollars anymore, and all of the Zorp citizens, instead of using the Zorp dollars, now they're going to use other stuff, like maybe they use sugar and they trade their neighbor's sugar for 5 pieces of paper to write on or something like that. Now that is how the barter system worked, but as a intermediary, gold and silver are kind of that store of value. You give your neighbor 3 pieces of gold. They say, okay, well, 3 pieces of gold, I know that this is going to be valuable because this is just what everyone has agreed on is valuable, which is kind of a whole separate conversation of itself. But the point is, gold and silver are stores of value. So you don't get interest by putting it into the Zorp bank, but the Zorp bank only gives you, let's say, $5 back for every $100 you give me. So that's a 5% interest rate, right? But if I'm printing so much money that inflation goes up like, let's say 10% every year, even though I technically give you $5, that $5 might not even be worth $5. That $5 used to buy you a Big Mac at the local Zorp McDonald's, but now you need $10 to buy a Zorp McDonald's Big Mac. So it doesn't matter that you got $5 extra because everything got so much more expensive that even though you technically got more physical dollars, those dollars can't buy as much. That's purchasing power. So when we take a look at purchasing power, the purchasing power of the US dollar is really starting to go down. Now, Bravos Research, I'm not affiliated with these guys, but I've watched a couple of their videos. I don't like how clickbaity some of their video titles are, or a lot of them are. They're very doom and gloomish. but I do think that they point out some really important details. And I
60%
think
margin.
that
This
it's
is
important to look at some of what they've explained. Let me see. Okay, so they talk about silver, the price of silver tripling, and how that's an indicator of potentially bad things to come. And they talk about generally economic growth and things like that, and the velocity of money. So velocity of money is how fast does it move through an economy, basically. Like how fast is it changing hands? How much are people trying to get rid of it or just use it in general? And if the money is not going to be worth that much tomorrow, then I might as well try and buy as much as I can with it today. So the velocity of money starts to go up when the actual value of the dollar goes down. And so I think that
in today's video. I'm gonna give you my exit.
this is why people like Clear Value Tax have talked about in the past investing in physical assets like silver or gold, either through stocks or through physical means. And this is, again, why you see groups like Costco selling this stuff, and they sell out of it pretty often. Because you have a lot of people who look at the geopolitical risk, look at the sovereign debt risk, look at foreign asset offloading. Oh yeah, this is another thing that I think is important to talk about, because you see all this geopolitical risk, and it's not just Americans who are putting that money into these physical assets. You have to look across the globe, and you see people across the globe are scared. Usually people, like, let's say you're in Japan, well, American stocks are doing way better than Japanese stocks for a long time, so they invest their money in the US stocks. Well, now that's not necessarily true. So where are you going to put your money? If everyone's going to war and people stop buying things from each other and you don't know what's going on, you can't follow the news, then what's a safe bet? What's something that you can put your money in and maybe not have to worry about on a day-to-day basis, especially when you have a day job and things like that? Gold and silver are really good for those long-term, more stable value. But that is generally speaking. And when you see the prices spiking as they have been in the last 6 months, year or so, that's not a good sign. That means that there's some serious debasement and distrust of the US currency right now. And will this accelerate? I mean, I personally don't know, but this is not healthy. This is, you look at how silver is moving compared to all time. And look, this is April 2011. It reached $47. And right now it's at 116. So I think that this is a really big indication that people all across the world are uncertain about what's happening next. And you have these big institutions like the Warren Buffetts of the world who are putting a lot of their money now into these different means. I think, let me fact check myself really quickly, putting money into gold and silver. Okay. He generally avoids it. Oh yeah, that's right. I think he's investing in Japan stocks right now. Um, yeah. So, yeah, he's more focused on investments. So, it's a hedge against fear during economic instability rather than a long-term compounder of wealth. So if you still believe in some growing productive asset, then it might be more interesting to look at something like semiconductors. So semiconductors, because of AI, are growing significantly in value, in price. If you look at the price of RAM, we've had a previous video about this, how the cost of not only GPUs, but even RAM sticks, physical RAM sticks, are going up. So these prices are all shooting up like crazy. Then you have groups like SanDisk, who's one of those groups that makes this. You can see their stock has been popping up like crazy. In the last 6 months, they're up 1,159.56%. They're up 116% just in the last month alone. So this is, I mean, I don't know if my risk appetite is sufficient here. I don't fully understand what their business model is. I don't understand what their future forward-looking revenue looks like and things like that. So that's why I'm not personally invested in that. What makes sense to me is the uncertainty. And that's something that I personally feel and that I personally find convincing, compelling. So that's why gold, silver, those are more interesting things to me right now. I do actually have exposure to semiconductor stocks. So I am still interested in trying to invest in productive assets, as Warren Buffett likes to call them. But I'm also trying to be very careful right now because I feel like in the short term, there are a lot of things that could potentially happen. And so when we talk about like what's going
The
on right
truth is,
now, you do see like again a lot of this foreign asset offloading. Now, even the central banks from other countries are starting to switch over to gold and silver rather than holding on to U.S. dollars. That is really just really concerning and also really dangerous because what that means is people don't really trust the US dollar to hold value anymore. So they're switching back to something else before maybe permanently for the X amount of years, or maybe until they see something else that they can trust to use as a base currency. I don't know if that would be crypto. I personally think that crypto is too volatile as well. But generally speaking, it's really important that people understand why, even though the stock market may start to go up, it's something that I've consistently heard called a melt up because the prices are not melting down. They're going up, but they're only going up a certain amount because dollar prices are the dollar itself is not worth as much. So if today a dollar can buy one Big Mac and tomorrow it takes $2 to buy a Big Mac, then yeah, like it's the same thing with the stocks. The stock would potentially not change at all. And they're offering the same service, like say Spotify or something. Nothing about the company changes, but now it takes more dollars to buy that same stock because the dollar is worth less. And this is why in the past people have said, oh, you should buy a house and things like that. You should buy real estate because yeah, that'll lock in some value. It's gonna appreciate over time and it's inflation resistant stuff. I I'm not 100% sure about that anymore because it does seem like there have been whispers about a potential housing bubble and how there is a potential correction coming for housing market. I personally don't know anything about that enough. I probably have to go look into it a little bit more. But when it comes to gold and silver, that is something that makes more sense to me because you don't have to pay things like real estate agent fees, taxes. There's not as much paperwork. So you can move in and out of those positions more quickly. And I think that especially in a world where things are moving so rapidly, you can have an announcement that's like a massive geopolitical event on a Tuesday or on a Saturday, and then everything changes by Monday. In that kind of world, I think liquidity matters. So that's where silver and gold matter a lot to me. Now, what I really like about that clear value tax guy is he even talks about his silver exit strategy when he plans to sell. Because, yeah, you could say that something is going to hold value and the price of something keeps going up, but when do you actually get out? Because if you don't choose the right time, even though you know which direction it's moving, you can still lose money. Like, look at me. I'm a dumb person and I invested in gold, but then I paper handed it and I sold while it was dropping for a month or two. And then I missed out on like 500% gains just because I didn't hold and I didn't have a good exit strategy. So I really wanted to understand what his exit strategy was, which he discusses really well. He basically goes by something called GSR, which is the gold silver ratio. Now, when we look at the gold silver ratio, we can see that it's going down because the price of silver is going a lot more up relative to gold. Now, the reason why this makes sense to use as a pricing mechanism to understand how valuable silver is, you have to think about currencies as something that may be volatile. Historically, they've not been volatile, but when you want to say how expensive something is, and this is what clear value tax talks about, this guy, Brian, he basically talks about how you have to look at something that's stable to use as a measure of value. And gold is pretty stable as a measure of value. I think there was some statistic, oh, no, not statistic, but there's a weird fact. Like you can still buy a house for the same number of gold bars today as some like 50 or 70 years ago. So that just tells you how much the dollar has devalued, or in other words, how much inflation has caused the dollar to lose purchasing power. Now, when it comes to the gold and silver ratio, so yeah, gold is kind of like the baseline. It's kind of like what you assume to be more stable. It doesn't move up or down as much as silver does, is what I'm told from Reddit and online. And then silver itself is going to vary a little bit more, But when it starts to get a little bit too popular, that's when this dude says, yeah, I'm probably going to sell when it gets to around 50. So right now, I would not be surprised if Clear Value Tax guy Brian is selling some more of his silver. Not all of it, but some of it. And then he goes on to talk about how, in the long term, I think that you still have to stay invested. You can't just sell all of it, because the reality is gold and silver move together. And then also, like, a lot of things are going to crap. And the reality is, it's probably going to continue going up. Now, if you look at any kind of price of things, there's always fluctuations. And sometimes psychologically, it's really easy for people to get a little bit too excited about something, a little too hyped up or whatever. Like, look at meme stocks, right? You see these prices shoot up like crazy, far past maybe what people would call their real valuations. And so it's good to have a baseline to basically say, hey, I don't care if it keeps going up any more than this. I don't care if I miss out on gains. I'm going to lock in my gains at this specific price. And so that's what he's doing here. I really respect that, and I think that that's a pretty good way to think about it. He does go on to talk about how historically, there are certain indicators for where he wants to move into gold, move into silver, and move out of silver. So I thought that all of that was really interesting. And I do recommend Bravo's research and the Clear Value Tax Guy's research too. These two groups are definitely very much knowledgeable about the topics they discuss. And I think that I'm learning a lot from those folks in particular. The reason why I want to keep this channel as it is because I'm more of a higher level. Here's what's going on internationally and all around the world. And then you can dive deeper into those specific topics or subjects if you choose to. Everybody has Google, so you can go look this stuff up yourself. I'm trying to be the entry point for you to find knowledge in other places potentially. Now, with that being said, I don't want to make this video too long. I just want to talk a little bit more about things that are going on in the news. So US Fed holds interest rates. We talked about that. We do seem to have some amount of S&P 500 going up, but then like generally have ups and downs in the markets that I'm not going to go into because I don't think they're big events. Middle East is worried about US-Iran conflict. There's still let's see here. Xi Jinping purging top military people. Are they actually going to go to war? So I listened to this podcast by, there's this ex-CIA agent dude whose name was something Kiriakou, I think. And this guy, extremely eloquent, very knowledgeable. I believe it was him or another ex-CIA officer who, recently in an interview, talked about how they would be rather surprised if China were to do anything with Taiwan in the next year. So in other words, within 2026. But it does seem like there's some sort of shifts going on with the China military there. China stocks also doing pretty well. Seems like they're trying to close up their ranks and bring a lot of the technology back in-house to their country. I think that makes sense because as the US tries to pull away from China and like all these other countries, each of these countries needs to start finding other ways to be more sustainable, which is also why you saw that EU-India trade ties. There's a lot of crap going on internally in the US. And there was this one billionaire, Ray Dalio, who talked about the rise and fall of empires. And I think about him a lot when I look at recent news because there's a lot of internal conflict and turmoil within our country. And part of Ray Dalio's research into history has said that a lot of empires rise and fall over 200 to 400 year periods. And during these transition phases, there's a lot of signals like civil wars, a lot of internal strife, political tension. You have like unstable currency, et cetera, et cetera. And what's really unnerving to me is the fact that Ray Dalio is just listing all these things from history, and it's checking a lot of boxes in my brain about where the US is today. So I don't know what that means for the long term, but I do think that Ray Dalio, this guy who is a billionaire, made a ton of money on global events, probably knows what he's talking about, at least to some extent. You also see Japan as an interesting group because I'm sorry, I'm about the quick transitions here. I want to try to keep this video not too long, but Japan's economy is also pretty interesting right now because what they're trying to do is improve the standards of living for their own citizens by doing things like suspending the consumption tax. Now, the problem with things like this is that their economy is historically been a little bit on the stagnant side. And one of the things that they've done recently is raised interest rates. Not very recently. I think the most recent meeting, they decided to keep it the same, but they have increased the interest rates a tiny bit from a global standpoint. And that's caused a lot of concern and movement of currency around the world because there's something called the yen carry trade. So the yen carry trade basically says, hey, I have dollars and I want yen because yen are cheaper, but I can buy more stuff with yen. So I'm going to take my US dollars and then convert them to yen so that I can buy more stocks with that same amount of money that I have. I think that it's a weird little hack, but the yen carry trade is something that is very well known. It's been done for a very long amount of time. But as the yen starts to increase in value, then you can't buy as much anymore with it because you need to first have because your dollars aren't able to convert to as many yen anymore because it's more valuable. So then what that happens is what that ends up causing is basically people who, let's say they have US dollars and they want to trade stocks or equities or whatever, and you're a big hedge fund or you're some big trading firm. Then you say, well, I don't care about having yen anymore. I'm going to try some other currency that's really cheap and gets me a lot of good access to equities and things like that. What's the long-term potential impact of that? Well, I think that these end up impacting bonds. And the reason why bonds matter is because these are basically how the government borrows money from investors. If the bond rates are going up and people are basically trying to they've been scaling back bond purchases as part of its move away from decades of ultra-low interest rates, limiting its options for interventions to bring yields down. What happens is yields are going to go up as a result of bond prices dropping. And when you have these bond prices going down, because they're so much cheaper, you have to compensate that with trying to give people better returns on those. So you have to tell people, hey, listen, I'm the government and I want to give you these bonds. Oh crap, you don't really want these bonds? I'll give them to you at lower rates. That way they're cheaper, right? Like here, the price is going down because nobody wants these. Ah crap, well, you know what we have to do? We have to increase the amount of interest that you get if I give you these bonds. That is basically where Japan is right now, where they are starting to lose interest in Japanese bonds. And they have to bump up a lot of their yield percentages. So what ends up happening is this sell-off in Japanese bonds is going to cause other currencies to also appreciate in value, I think. Because if you have like other treasuries and other bonds that go up, then what ends up happening is I think what ends up happening is that you will strengthen the other currencies because people want to buy things like US treasuries. But one of the biggest problems is that it's going to make everything a lot more expensive. So it might sound good that US bond prices would go up, but that raises the cost of borrowing. And when we talk about the cost of borrowing, now we talk about the more average Joe consumer. So if I want to buy a house, I need to get a mortgage. I need to borrow money. If I want to buy a car, I need to get some sort of borrowing of money in order to pay for that car. That's going to get a lot more expensive. So that's really, really bad because in a worst case scenario, they explain it right here. If there's a sharp escalation in those interest rates, then the country might even default on the debt, because when you issue these bonds, the bonds are debt. And if you cannot pay that back, look at Greece. Greece, I think they defaulted on their debt, and they basically said, "Oh, sorry, we can't pay back these bonds that we said we're going to give you like huge amounts of interest on. So you're just crap out of luck." This is potentially impactful to other things. Now, is it going to be a crisis? No, but I think it will have noticeable impact on those other groups. Um, this is all to say that there's a lot of economic uncertainty going on around the world. And I think what ultimately should be the takeaway from here is that if we look at the global economy right now, there's tons of volatility, tons of wars or potential wars that could escalate, tons of weird inflation and like weird internal instability within the US that's causing ripple effects all across the world. So it makes sense that a lot of people would invest in physical assets like gold and silver. I'm sorry if that started to go off towards a ramble towards the end, but I hope that this was helpful. I hope that you continue to learn on your own and grow with me. And I hope that you stay safe out there with whatever investments that you may decide to make. All right, thanks so much. I hope to catch you in the next one. Have a good one.